African Bank is the largest unsecured lender in the South African market. That's with loan advances in the region of 40 billion rand and a market cap of 31 billion rand. In addition to a long-running SA corporate bond program, African Bank recently floated a $350 million bond in London and a €2 billion note. The bank has a price-to-earnings ratio of 13 and will release their interim financial results on the 21st of May. Are you in favor of the African Bank story?
Yes, look, we're heavily invested in African Bank, so the disclosure chart should reveal that. It's a stock which we've owned since it traded at around 15 Rand. It did very well in the early stages of pioneering this industry. It picked up a nice loan book from Sambo. It had a relationship with the government, payroll people. So it basically pioneered this industry. It's been extremely well run. It's basically been built by Leon Kirkenes and Gordon Shachat, and they've built the business now into the giant that it is. The corporate program you're referring to there is they basically lend money to small individuals, but they obtain their source of funding is not from depositors in the normal banking scenario, it's from the corporate bond market. So they're big player in the corporate issuance game, and that has been extremely successful, and lots of South African investors in their pensions and so on hold African Bank paper.
Because they believe in the story. Do you believe in the African Bank story?
I do. They've had consistent earnings over the last couple of years. They've grown year on year between 20 and 30% consistently. And they actually say now in the last set of numbers that came out that they actually expect that to slightly dip to around 20% growth going forward, which is still a good number. But compared to Capitec, it's not as big. But then again, there's a big question mark with Capitec for me. I mean, is it perhaps growing too quickly? It's trading at a lot.
Let's not go to Capitec yet. We're still staying with Able. You like the Able story.
I like the Able story. It's trading. It's got a 5% dividend yield, so it pays a decent dividend. It's trading at PE of 12.8, as you said. They're growing rapidly as well. They've obviously got huge exposure through Ellerines, which is their retailer.
And have they got Ellerines right?
Absolutely. They've got huge kiosks that are within their stores. They've made them a lot more easily accessible to their customers. And they're granting bigger loans. So, the whole story again, are they actually granting too much cash, to the lower income market? Well, they seem to say that it's all under control because they're consistently changing the model. And they're not scared to hold back if certain customer behavior changes in line with what they adhere to their principles to loaning out cash to that market. So they seem to have it under control. It's a big story in terms of how long it will go on for. With all the companies we're discussing. When will it pop?
Let's just focus on this Ellerines story. They've taken a long time to get the strategy right.
Yeah, they bought Ellerines at the top of the market when everything was booming back in 07, and it was a disaster because almost immediately credit tightened, the economy contracted globally, and it looked like the most mistimed transaction in history. There were also some funnies that they discovered after they concluded the deal. The guys went and wrote all sorts of bad business. They sent in their own guys and decimated that business. They basically took out 4 different management teams, lots and lots of layers of management. They lost market share. They seem to be gaining that back now. Most of it went to Lewis and JD, and they seem to be getting it back. The interesting thing here is when you talk about credit extension, you've got to go to the point at which credit is being sought. And that typically in this country is for home improvements, for furniture, and for education. Those are the 3 biggest uses of credit by the lower middle income bracket. So I think this is an area of growth for them. They saw it, they took the long-term view, and I think at some point they plan to offload the furniture and trading business. Now that they have, Daniel has said, have put these kiosks into each of the stores and have got those clients. Because African Bank never let go of a client. They never send somebody out to a credit default bureau and lose contact with them. They keep them on board. And they're very good at working out what the correct risk profile of a client is and giving larger loans to quality customers that repay and pulling in the horns on those that don't.
Spoken like someone who has a lot of exposure to African Bank. Daniel, hot or not on African Bank?
Most definitely hot. I like the business. I think again you've got to question over a longer period of time if it is a bubble that will crack or will pop. And I don't see it happening unless there's a huge change in the economy and we suffer quite a severe, a recession or depression. But until then, I mean, there's huge demand in this space in South Africa and Africa, and there's huge scope for them to still grow into Africa as well. So quite aggressive. I think hot, eh? I think at current levels, 36 Rand is quite a big support level. It's somewhat pulled back from 40. 40 seems to be the resistance. Hasn't had nowhere close to a move like Capitec.
So hot in your book at 36.
Definitely hot in my book at 36.
At 36 Rand, still very hot for you, Paul Theron?
Yeah, its share price is disappointed in the last few years, which I think is partly because it's big enough to be viewed as a bank, and you know what's going on globally with the banks and all the trouble they're in. So it doesn't really get the credit for its much simpler business model, and yet it hasn't benefited in any way from the re-rating of the retail sector. So I really think the company's earnings have been fine, but it doesn't get the respect in the market it deserves, and sometimes that's an opportunity, that's a catalyst, so definitely hot for me.